So, Todd, what accounts for this persistent outperformance on big cap growth here? I mean, we were talking with Fiona about this. Some want to blame passive investing. You study this very carefully. Is that an issue, or is there some other problem going on here?
Well, I think NVIDIA has been driving the stock market in 2024. I don't think that's a passive approach. There are active stock pickers, both individual investors, professional managers, that are betting on NVIDIA's continued growth tied to artificial intelligence. So that has not been tied to ETFs. We've seen money going into broad market-based, market cap-weighted strategies tied to the S&P 500 and other strategies thus far this year. NVIDIA is driving the market higher. It's not that money is flowing in to one stock in particular, because we've seen a performance disparity between the Mag 7 stocks. They all were going up in 2023. They have not all continued in 2024, even though money has gone in to the Vanguard 500 ETF. So active stock picking is still driving the market, just not everybody's having success.
Yeah, you know what amazes me, Fiona, how the small cap market is small and sort of getting smaller relative to the big cap market. So I'm looking at the Russell 1000. This is your data, $50 trillion market cap right now. The Russell 2000 stocks, not 1,000, has $2.9 trillion in market cap. I mean, it's 1/16th the Russell 2000, the size of the Russell 1000, with twice as many stocks in it. The 10 largest companies in the Russell 1000 are 30% of the Russell 1000, so about 15 trillion of the market cap. So the big essentially keep getting bigger, you know, and it's rather remarkable. And it's not just tech. Even, you know, some of these indexes, you know, Exxon dominates energy indexes, for example. Amazon dominates consumer discretionary indexes, and Alphabet dominates, you know, I guess you'd call it communication services indexes. So the big keep getting bigger. So the value guys do have a certain point here, that money just keeps going into these areas here.
Well, I mean, the indices just reflect the nature of the market, right? And the reality is that in many of the sectors, there's a concentration in that of between the winners and the losers. So it's interesting you mentioned Russell 2000. Actually, the threshold for the breakpoint from small to large caps has actually increased to 4.6 billion, which is a rise of nearly 10%. So there is an underlying dynamic there. But clearly, I think one of the benefits to the Russell franchise generally is our ability to provide different sleeves of exposure. So for those of people who want to get concentrated exposure to value or to growth, we have the indices available to do that.
Yeah, and it's the same way with not just size, with big cap getting bigger and bigger, but it's the same with growth. All the money is going into growth. So look at these numbers: $98 billion in assets under management in the Russell Growth. This is the ETF here for this. And 56 billion in the Russell 1000 value. And again, I know you're an index provider, you're sort of agnostic on all this, but it's quite remarkable to see the money, the size of it that keeps going in. Todd, same thing here. So again, larger companies keep getting bigger, and growth companies continue to keep getting more money into them. Would it take a dot-com thing? Or would it take, we're certainly not in a dot-com atmosphere, would it take a financial crisis to change that at all? I'm just curious about, we've been waiting for 15 years for something to happen here, mean reversion, and it's just not happening.
Well, we have seen periods when value outperformed growth. So it feels like a long time that growth has outperformed value, but there have been periods when the pendulum has swung back in favor of value. And so you showed about $56 billion in that iShares Russell 1000 value ETF. That's still a lot of money that is being impacted by these rebalance that's taking place next week, of new companies coming in, companies moving to the growth, companies moving into the small cap space. So I do think it's worth paying attention to value, but money has stayed in growth, and it's up 20%. I think the iShares Russell 1000 growth ETF is up 20% this year. So the assets under management continues to climb higher. We do think there's a place for both growth and value within a broader portfolio. Just people are skewed more towards growth heading into the second half of the year.